This video is for educational purposes only and not financial advice. AMD didn't just beat earnings. It changed how Wall Street is viewing the company. The stock surged from around 355 to above 450 after earnings. And suddenly this became much bigger than just another semiconductor earnings report. And when you look at the numbers, the reaction starts to make sense. Revenue came in at roughly $10.3 billion, beating expectations. EPS also came in ahead of estimates. And overall growth accelerated to nearly 38% year-over-year. This was exactly the kind of quarter the market wanted to see. But this wasn't just about one strong quarter. If you zoom out, the trend becomes very clear. Revenue and earnings have now accelerated for 3 straight quarters. But the real signal was margins. AMD's non-GAAP gross margin expanded to 55%. That tells you something extremely important. AMD is no longer just selling more chips. It's selling higher value AI infrastructure chips. And that is what forced Wall Street to rethink the company. And the engine behind all of this was the data center business. Data center revenue surged 57% year-over-year to roughly $5.8 billion. This is no longer general AI hype. This is AMD directly monetizing AI infrastructure demand. Hyperscalers are scaling deployments, Instinct GPUs are ramping, and EPYC CPUs are becoming increasingly important in AI servers. So when you step back, 5 things become obvious. AI demand is accelerating. Data center growth is leading. Guidance was raised. Hyperscaler demand remains strong. And most importantly, the growth trend is still intact. And then came the part that really changed sentiment. Guidance. AMD guided next quarter revenue to roughly $11.2 billion. Well above expectations. And that's when the market realized this wasn't a temporary spike. And this is where things changed dramatically. AMD didn't just rally after earnings. It broke into all-time high territory. When a stock enters blue sky territory after a major earnings beat, institutions that were underweight suddenly have to chase. The rally continued with analyst target upgrades and an accelerated AI chip rally, marking a new all-time high breakout. And now Wall Street is overwhelmingly bullish. More than 30 analysts currently rate AMD a buy or strong buy, with virtually no sell ratings. So the real story is not that AMD beat expectations. It's that AMD exceeded how strong those expectations already were. The market expected a good quarter, but it did not expect this level of AI acceleration. This wasn't just a beat. It was a full repricing event. Now, NVIDIA is still the leader, but AMD is no longer ignorable. The market is starting to believe there may be room for 2 major AI infrastructure winners. The AI chip war is heating up, with NVIDIA, AMD, Broadcom, and Intel all vying for dominance in this competitive segment. Market dynamics show low short interest but heavy call option buying, indicating a situation close to a short squeeze. And this story is probably not over. AI product launches, hyperscaler deployments, next earnings. This is becoming a multi-quarter AI infrastructure story. The market may be treating AMD as a long-term AI infrastructure winner, validating AI demand and repricing its stock. So in the end, this wasn't just an earnings beat. It may have been the moment Wall Street stopped treating AMD like a cyclical semiconductor company, and started treating it like a long-term AI infrastructure winner. And if that's true, the AI chip race may have just changed. Visit AIStocksHub.com for detailed reports on emerging AI companies, offering insights into the dynamic world of AI stock investments.